Hi, Finance and Coffee, and welcome to another edition of Talking Finance with myself. Special guest today, I've got Richard Chesworth from Bluestone Home Loans. Richard, you're the newly appointed head of specialized distribution. So, welcome to the show. Welcome to it's been a while since we've had a chat, mate.
It has, Dien, and thanks for the opportunity. It's nice to join you all at Finance and Coffee again. It's also nice to be back into the SMSF lending space with the Bluestone team. So,
That's awesome.
bit of a
So,
back to the future for me.
well, it is the topic we're going to talk about today, which is SMSF, because we've found that it's come up quite often in the last 3 weeks, and this is why I sort of approached you to have a quick chat about it. We've had a few stop starts in terms of the platforms to have a chat about it, but we're here now. We're going straight directly to the group, and let's see if we can knock this out in say 20 minutes. Okay.
Certainly, great.
Okay. So my first thing to you is basically before we go into the basics of what SMSF lending is, I know that there was some regulatory change or announcements about it. So the floor is yours. Can you explain in simple terms what's going on?
Yeah, look, it's actually really positive news, and I think for those of you who've been around long enough will have known that the Financial Systems Inquiry actually recommended abolishing SMSF lending back in 2014. The government came out and said, no, we're going to leave it in place, but we're going to, we want the regulators to monitor it closely. So you've got the Council of Financial Regulators, which are um, the Council of Financial Regulators is APRA, ASIC, the RBA, and Treasury. So the Council of Financial Regulators, along with the ATO, who are the regulators for self-managed super funds, committed to do a review. So they did a review back in 2016 and said, look, that they had concerns of the SMSF lending market, but they wanted to keep going and they would come and do a review in 2019. That review took place. And then at that stage, they said, we're going to review again in 3 years' time just to see how it develops. Well, that review was just released back in November, and it was actually first completed in September. What the review, I think the key outtake from it is while they're concerned with some individual situations and the impacts on retirement needs for some individuals, they're quite comfortable with how the market is growing and they don't see great systemic risk to the overall superannuation market, the property market, etc. So their view is they're going to come back and review only on an as needs basis. So they've stepped away from this 3-year review. So this has always been a spotlight since 2012, 2014. So that's good news. But if I was to highlight some of the key points out of it, you have by 2020, there was 11.8% of self-managed super funds had a limited recourse borrowing arrangement. 95.9% of all SMSF loans or limited recourse borrowing arrangements are into property. But I think the big shift we've seen is since late 2020, we've seen to now an increase in the non-bank lender space, in the SMSF space, which now covers 36% of the lending. When you consider that previously, up until about 2019, it was predominantly the majors, AMP and Macquarie, there's been a huge shift there. So it's been quite a bit of growth in the area. The good thing is we've got continuity that it's now on an as-is basis. So that's probably the biggest thing to come out of the updated review there.
Okay, that's pretty cool. So in real terms, for a person with their own SMSF, what does that mean? So they get a loan with a bank or a lending institution, then
Yep.
they don't need to get it audited as
No,
often as
it's
review, or
more a
what does it
case.
really mean?
No, it's more that the market continues. So the concern was a number of years ago that particularly when you've got someone buying off the plan, it was again the risks you've got of, well, what if in 18 months' time they've abolished the rules to borrowing in super? So it's that uncertainty. You've mitigated some of that risk there as well. So it's just certainty that it's there going forward. Because usually these things, if they've said you can't do it anymore, they're grandfathered. Even when it's grandfathered, we'll even look at the lenders who've stepped out of the market. What we've seen with their products is the rates have just continued to climb. So you want an active market to make sure the market's competitive, and that's probably another point to look at there, where we're seeing the loans at the lenders who've stepped out, and sadly to say some of the current lenders operating in the market, residential SMSF loans where the interest rates are sitting in the mid to high 8% now, and the lending values are quite low. So it is active markets are key, competitive markets are key for delivering affordability to you and your clients.
And that's awesome. So that would obviously explain why we're getting a bit more inquiries on Finance and Coffee about SMSF and who does it and so forth, right? So, okay, so brings me to my next question, because obviously there is, how do I put it? I think there's a lack of understanding with a lot of brokers in terms of what SMSF lending does or is and what you need and so forth, right? So can you go through a few of the things that, if I advise a brand new newbie as a broker, what I have to look for? I mean, I think the most obvious one is because sorry, you can't, while you can refinance later on and now, you can't take equity out for even renovations, right? So
yeah. That's
what else is it?
That's a question I've seen so much recently on Finance and Coffee. The point of, we want to refinance, we want to get this extra money out and the like. Look, the thing I love about SMSF lending, and I'm probably one of the few people in the country that gets excited about it, what I really like is the regulations and the guidance really put a real framework about what you can and can't do. So you can borrow to acquire an asset. When it's property, it's a single acquirable asset. At Bluestone, we're running a whole lot of sessions to help people understand what that is and what doesn't meet those guidelines. So you can borrow to acquire. You can also borrow for maintenance and repair on the acquired asset, but you can't borrow to improve it. So that's why you're only looking at it through all the lenders. It's purely borrowing to acquire the property, but then you can refinance it because that's maintenance and repair. You can improve the property, but you can't improve it through borrowing. So that's why there's no cash out or anything like that. So it's getting the balance right on how fast do you pay the loan down, keeping some of the liquid assets within the SMSF, because I've seen a few people caught where they've constantly paid the debt down, but the next thing you know, there's an added cost to the property. So it might be a special levy on a strata, or they've got a major issue they've got to rectify with the place, and they've got no cash, they've got no liquidity. So that's another point there. So it's up to us then as a lender to kind of really structure a product policy around some of the key points to help keep it simple. So our loan assists with the purchase or the refinance of a property. If it's within the lending values, we can also put in the direct costs relating there, particularly in a refinance, because you've got exit fees from other lenders, maybe and then registration, the like, and our entry costs. So we can fund all that in there. Okay, so that's the first point there. Look, I think as a broker, the main thing is, particularly for the brokers who are new to the market or just haven't taken the step in the SMSF lending market, it's actually aligning to a lender and their BDM support staff who can actually help you through the process and really guide you there. Okay, so, and what we're seeing is you all may be experiencing a drop in your incomes just with the change in markets. And probably the key way to change that is to look at new spaces. So it's again up to us as the lender to have a clear product parameters to help you through the process of keeping it basic. But what I will really call out, it's really important you stick within your licensing regime. You can talk to your customers about the appropriate credit advice. You shouldn't be recommending setting up an SMSF that's right outside your license, or buying or recommending go and buy this sort of property in your SMSF. That steps out there. Where I see the biggest opportunity for you as a mortgage broker is to really leverage your relationships with accountants and planners, because they're not licensed to talk the appropriate credit solution. If you talk the appropriate credit solution, it's going to open up all those opportunities. What did I just say? There's all those loans sitting there dormant because no one's been looking to refinance them. That's a good way into a new client base. So probably back to what you're saying, Dien. What is at the basics? I think really stick to the credit piece. Make sure we're doing that well. Look for the lenders who've got the support mechanisms there and the clear framework to assist in setting up the loan. One thing we've really done in coming to the market, we only formally launched in October, was we've been really clear on how we assess contributions to the fund for servicing. I know a number of the lenders, unless you've got historic contributions, they're not going to look at, additional concessional contributions. We're really clear that, you may have a young couple who might be in their mid to late 30s, for example. They've both had, good incomes. They've built up considerable super. Now they've turned around and said, well, actually, we've got all our properties outside of super, what we're doing there. We're now going to set up a self-managed super fund and we're going to buy the next property. So the first thing we're looking at, we have no concern with the super fund just being recently set up. But secondly, for them to acquire the property, it may be a need for them to have some additional concessional contributions to make it work. And our policy clearly lays out how we look at that, where we need extra supporting information and where we don't.
That's awesome. Thank you. But I think the one I want to reiterate to the audience is what you said about staying in your lane with regards to the advice piece. So I've seen it quite a few times, even on different questions about, hey, my clients were short on funds because they, just as an example, stamp duty was miscalculated. That's something, I'll be honest, a conveyancer is supposed to be doing, and that's what the client's paying the conveyancer on. But then the broker's getting lumped with that responsibility in terms of, it was missed because it was the broker's fault. I think the same thing is going to potentially be an issue with SMSF. You're only there to do the loan. You're not to be there to go, hey, recommend maybe you should buy this property in an SMSF, mate, and you should talk to Bob there to set up your fund for you, because down the track it's going to kick you in the ass. Sorry, I should have mentioned that this was not a non-PC chat, but yeah.
Yeah, I think you're right there too. It is sticking a swim lane because the ultimate responsibility sits with the SMSF advisor. The SMSF trustee. They're responsible for everything, and the penalties can be quite high. But often they may not have the experience level, and they're calling on everyone else and putting the onus on everyone else. So what we're finding is you might be in one of those positions where you've got a question. Speak to your Bluestone BDM. My job, look, I've been living and breathing this since 2006. So my job is basically to back them up and provide them the details beyond, what's your product look like and what are the features of the product? Okay, so we get a real knowledge bank here. So that probably leads into to what we're doing in the market and what our approach is. There's probably a few key points there. It's first of all, education. I think there's a huge gap in supporting brokers in this market just from the experience I've seen in recent years. You've got a small cohort of brokers who are specializing in this, and they're really managing the needs. And if you look at Finance and Coffee, it's often the same names which are coming up, which is great. They get it really well. But that means there's such a large number of brokers who have probably steered away from it. They've gone, yeah, I'm not going to go there, or I'd love to go there, but just unsure. So we've got our primary focus is on education, helping people understand the market. So if you haven't contacted your Bluestone BDM, because we've been running sessions and the like, and in the new year we're going to be running more sessions on really the basics of SMSF lending and what to go through there, but right through the journey to be able to help you. I think the other key point is, we've got to have a compliant offer. No questions of that. And we've made sure that's the case, but I'm not going to dwell on that now. But the other point is execution. You want to work with a lender. When you lodge your application, you know it's going to be addressed and progressed and work towards settlement. So it's a specialized market. So you've got customers purchasing, we need to meet settlement on time. So on a turnaround time frame, what to expect from Bluestone? We're assessing these loans in the same time frame as our standard loans. So they're picked up in the same time frame, which currently is in the 24 hours and gets through to that first decision basis or response basis. we're doing that in the SMSF space.
Wow, because usually SMSF loans are probably 3 times the SLA of a normal loan. So that's pretty cool. That's pretty cool.
Yeah.
Um, so look, at the end of the day, for the average broker, I think there's lots of opportunities coming. Number one, as the rates are going up, most people for some reason, maybe it's just like our own super, we set and forget. We don't really talk about. We don't even look at it until we need it, right? So I think there's a lot of people on those loans that which have just done nothing with it. So it's probably another good point to, I suppose, touch base with your own database to go, hey, maybe it's not only is it time to look at your own loan because rates are going up, but maybe you look at your own SMSF loans as well. And here's a lender that can actually do it for you in a timely manner. Whereas before, I think that's one of the things that which might have made people shy away from it because the turnaround time was horrendous for an SMSF loan.
I think there's a couple of points here. I think the whole market's probably guilty of it, where in the early days, the SMSF loan was hard enough to put in place in the first place, heaven forbid wanting to refinance it. So that's become a lot simpler. With us, we are fully integrated with AOL. We've got full guides to help down that process. But you also look at it, when you are assessing and reviewing a client's position, it's usually because they've got a new acquisition or they're changing something. So that automatically leads you to go, okay, well, we're going to take some equity out of that property. We're going to change the rates on that property and, really look at their overall portfolio. But the one that sits to the side is the SMSF loan because everyone agrees, yeah, we can't get equity out of that. So let's just leave that for another day or it's not touched because we've become quite complacent on it. The accountants and planners have thought, well, the majors have stepped out. That just has to sit there now. And there's so many opportunities here. So on that point there, it is. I think it's a market thing and it's probably a super thing where people get a bit complacent on it. But you're shifting a customer potentially, particularly if they have for a number of years, they've been positively geared. Now they've gone to negatively geared. And you don't want that in an environment where you're only paying 15% tax because anything positive, you want to start either paying your debt down or diversify your investments. So that refinance point is key. Ability to execute. And again, how have we got that? We've integrated with AOL to stop your duplicating of information from one system to the next.
Mate, well, looking at the time here, I think 17 minutes, 18 minutes are coming up. Thank you. I might have to get you back to have a longer chat about it, obviously, because it's not something you can actually just chat in 15 minutes. But just one final thing as well, because I'm just, while we were chatting, I was looking at the chat in terms of the past chats. SMSF and offset. Do you guys have it? And is it a thing?
It's a fantastic question. Look, I would love to have an offset account on Bluestone's SMSF loan. Our view from our legal sources, and also my opinion, is we can't have it. Now, you remember the days, maybe some of you, the St George's and AMPs had an offset account, and they could because they worked under an approved deposit-taking institution, so they had a license to have deposit accounts and borrowings and loans. As a non-bank lender, we only have a license for loan accounts, mortgages. Now, if we have an offset account, normally it doesn't really matter with a non-bank lender, it just forms a sub-account of the loan. Where we start hitting complications from a regulatory perspective or compliance perspective, if we've got an offset account and it's a sub-account of our SMSF loan, under the regulations, as the lender, we are only permitted to have a charge over the acquired assets of the property being purchased. If we've got that charge is over the deposit funds as well, have we technically got a charge over other assets, the SMSF? So that's the first point, which is still really unclear. If the ATO and ASIC turn around and say, no, that's okay, because we're going to deem that as redraw. Remember I said at the beginning, you can only borrow to acquire, maintain or repair the asset. If you're redrawing funds out, that's deemed a new borrowing in the ATO's eyes and the regulatory guidance papers. So if someone's got 100,000 sitting in an offset account in their SMSF and it's a sub account of the loan, the only reason they can draw those funds out is for maintenance and repair of the property itself. It's not to go and buy shares. It's not to go and invest in another property as a deposit and the like. Now, this is all untested. Bluestone doesn't want to be the lender to test it.
No.
I think the thing is as well, you might think, well, that's not my concern as the broker. It's the lender's concerns. But we all know when something goes wrong, it doesn't matter if you're involved or not directly, the customer's going to go, what did you put me in that for? It was non-compliant. You should have known better, this, that, and the other. So we're really kind of, it's not a subject of saying, yeah, sorry, we don't have offset. It's actually putting the reasoning behind why we don't have offset.
Yeah, I think even if you are an ADI institution, I think that having the ability there, you can't control what the customer's going to do, even if you advise them the right thing.
But even if it's an ADI, they could take those funds out and buy shares. They could do whatever they like. The problem is, because it's a separate account, for us, it's under the charge. So, yeah, in my past life, I would have loved an offset, but we couldn't have it there either. So, but now all the banks have gone, so it's a lot harder.
Well, mate, thank you so much for taking time to speak to us today. I'd love to have you back again on another platform we were trying to do, but that's another story. Okay.
That'd be good.
All right. Well, thank you very much, and let's see if we can actually chat in the new year to see if there's any changes in how you guys are going. Okay.
Great, thank you, and thanks for your time and everyone's time for watching.
Thanks, Jesse. And